Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I am your stock mentor, Brian Johnson. And we had, a big gap up to start the day. We continued to run up. Finally, the bulls showing some strength here and getting up over, yes, the more major levels we were watching. We had a gap up where? Yup, right to the levels I've been talking to you guys about. And finally, towards the end of the day, we got the break we were looking for. So, above the 10-200 level, gave you a little bit of a play. Not much, 60 points, but hey, it's something. At least you're in it. Maybe if you're holding overnight, you might want to be a little cautious about that come the morning time. But I certainly wouldn't be surprised to see a gap up tomorrow. If we do see some sort of a move down, though, in the morning, as long as we're not down a whole lot, let's say we're only down 2 or 3 points, I wouldn't be too panicked about it. That's 2 or 3 points on the S&P, by the way, not the Dow. So, yeah, if we're down 2 or 3 points, wouldn't be too concerned about it coming into the morning. That's pretty good if the bulls only give up a couple of points overnight. So the Dow on a daily, over 10, 200. Look at these beautiful breaks. Blue line and 50-period moving average. Pow, there's your move to the upside. A great place to get long. Hope you guys had this marked in your charts. Hope you were watching it based on what we've been talking for, a few days now. Definitely, I think since the beginning of the week, I've been calling for this 10-200 level. So 10-200 up and over that took you right back towards the 10-270 level, which is the 200-day moving average, and we closed right at 10-260. So, not a lot of points to play on the Dow, but certainly profits to be made there if you like to play the Dow. Now you're looking for a break up and over that 200 and back up above 10. 300 is probably the most logical place for your next entry long if you're not long already. I'd watch that coming into tomorrow. Will the 200 hold? Yes, no, it's anybody's guess. I don't know. I think maybe we come back up and over it here. Maybe not in the first test, but I do think we can get back up and over that. So anyway, watch that closely. This will be a big level here of overhead resistance, regardless of whether or not we break it or not. 10-300 gives you a pretty comfortable, I think, place to go long from there. And I would just be careful about holding over the weekend, but it's up to you. Manage it the way you want. NDX on a 60-minute also. Look at this beautiful gap up right on top of the 50-period moving average, right at that 1840 level that I talked about for overhead resistance, and pow, away we go. So for those of you playing it, watching the videos, 1840 was your place to go long, giving you 22 points of profit today. Here it is on a daily. Look how we did hold ultimately the 200-day moving average now. So heading its way back up. My overhead target now would be right around the 1900 area, which would coincide with all of this up here. NASDAQ on a weekly also trying to push its way back up after a beautiful test of the 50-week moving average, now coming back up. So overhead here is also right around the 1900 area, which gets us pretty close to that 20-week moving average. I don't know exactly where the 20-week is. I've got lines drawn through it. But I think looks like maybe 1886. I don't know. It's up there around the 1900 mark. Find it in your charts and make sure you've got it marked coming into tomorrow, because that's right, tomorrow's Friday, and we will end the week. The candle will close tomorrow night. SPX on a 60-minute doing the same thing. Over 1090 was my call to the long side. That gave you 13 points. You're welcome. Hope you've been following along. Should have given you a little bit of profit today if you stayed in overnight. Yeah, why not? Yeah. Like I said, watch to see what happens overnight. If we only give up a couple of points, I really don't. I wouldn't be too worried about it from a bull side. That's not necessarily a bad thing to maybe drop down a couple points overnight. A gap up in the morning would of course be a little bit nicer for the bulls, but then you're going to want to watch these overhead levels, especially right around 1120. That'd make for a good profit target or a place to maybe move up your stops once you hit there. So I'm going to call for 1115 and then about 1120. So 1115 and 1120 for your overhead resistance areas. It's SPX on a daily. Look at that. Isn't that cute? Touching and kissing the 200-day moving average. High today was 103.52. 200's at 1104.44. Yep, close enough for me. Within about a point. I'll take it. So right back to the 200-day moving average, holding there for the time being. What would be the best way to get up and over it? Yes, you're right, a gap. We'll see if that happens in the morning. But look for a push up and over that area. If you're not long already, or if you got out today at the end of the day, you're looking to get back in tomorrow, you'll want to be sure we're up and over the 200-day moving average before you make that move. Then your target is, of course, still up here around the 1120. I really like that. I'm seeing a good confluence of overhead resistance. We dipped down. We kind of touched the bottom of this thing, and I did talk about a potential setup here coming in the markets and how I thought they might want to try to hold this 50-week moving average at least for at least 1 week. It looks like we're going to make it. So this is down at 1075. I think the market's in good shape up here. It looks like to me like we had a pretty decent move today. Market internals look good. Volume look good. Pretty sold on it. I think we had some pretty good confirmation most of the day of this move to the upside, so I'm liking it for the bounce. Now I'm really liking it after we broke those more major overhead levels. See how important that is? Way important to be doing that. VIX on a daily, we did drop today, coming right back down and into the, let's call it the yellow zone. So we're out of the red zone, back into the yellow zone. Fear coming out of the market. This is just what you want to see on a move up, is the VIX moving down. This isn't so good for people playing options, because you have to kind of deal with the volatility pricing being built into the options. But on another note, fear is coming back down. Now, this will be the area to hold here. Let's see if it finishes kind of sideways after tomorrow. But with fear coming back out of the market, we're still seeing choppy sideways action in the VIX, which means investors are not really sure what to think about the market at this point. So showing a lot of indecision in here, as the other markets have been. We talked about that too in the indices. Now, the VIX really shows me this very clearly right here with the move to the side. Apple on a 60-minute had a gap up, ran sideways all day long, just like the markets, and then started its way up. Looks like it's coming right into this overhead